You ever wonder how you can make $1 billion? Yeah, billion with a B. The top 25 fund managers made $21.3 billion, almost $1 billion each on average. So why aren't you running a fund? Now, most of us don't run a fund so that we can make $1 billion, right? There's a lot of funds. And in fact, the average fund is quite small with, I think, around 17 investors total and $1 million or $2 million in complete assets, right? But why do people do it? What are they? Can you take advantage of it? Let's talk about that a little bit. All right, so let's talk about funds. I get a lot of questions about funds. I'm no expert. Last year in 2024, I set up a fund, a private credit fund, to do some of the business that I transact. And so let's just talk about some basics. Hopefully I can get the basics right. Let's use this example. Bro uses his own money, lends on a deal. That's not a fund, right? The pros of this, though, is it's incredibly easy, right? You find a deal, you put your money in, all's well. The downside's a little bit painful, right? One, unless you have unlimited funds, it's pretty limited in funding, limits how many deals you can do. And that leads to the second one. If you're putting all your money into one deal, you have an incredible amount of risk in that one deal. That one deal goes bad, all your money goes bad, right? A little bit of a pain in the butt. All right, different approach. Bro throws his money in a bucket, then gets his friends to do the same. Now they have a big pool of money. And this is starting to look like something. So let's start separating it out. These friends of his, we're going to call them, those investor friends, his limited partners. Bro becomes the general partner. And as general partner, now he's taking that pool of money and he starts investing in a bunch of deals. You can start seeing where it solves some of the problems that we originally had. So now we have a fund. Those investors that came in with him, we call them limited partners, LPs. He's the general partner, the GP. He's making the decisions for the money. Those limited partners come into this deal by reading and agreeing to and signing some documents that were a pain in the butt for him to create. The private placement memorandum, limited partnership agreements, subscription documents. But now we have a fund structure, right? There are investments in all these homes. And so let's get back to the pros and cons. Pros, definitely scalable, right? Now bring in more friends, bring in more money, go invest in more things. You can scale and scale and scale this. Second thing, lower risk for everybody. Rather than investing in one thing, that one thing either needs to win or hopefully not lose. Now you're investing in a portfolio of things. I'm generally thinking about lending because that's what I do, but maybe you're buying real estate or whatever. We'll talk about that in a second. If one of those goes bad, everything didn't come crashing down, right? You can handle some losses and still win as a whole. Now the cons, let's talk about, there is a con. The con is it's kind of complex to set up. It's not as complex as we might all think, but it does take some attorney support. You are filing and making sure you align with the SEC in your state or nationally. So there is some complexity in the setup, right? And then in some of the annual processes maybe, right? So there is some complexity, but you can see how this allows you to really scale a business and to do it where you're portfolioing that risk and really keeping that down. So let's talk about one last thing. What kind of funds are out there? And I want to talk about this because, I spent a lifetime in finance, never really thought about these things. And a few of them in recent years made me think, oh, really? That's all that really is, because you don't think about it. So this might be an old hat to most people, but what is a hedge fund? I have some definitions written on the screen. You can use those, and they're oversimplified. But a hedge fund is basically a fund that is investing in stocks and bonds, things in the public market, right? So we have funds as a big thing. And then each type of fund is different basically by what it invests in, right? So a private equity fund invests in, shockingly, private equity. Private equity meaning private, not public, not on the stock market. Equity meaning ownership, right? So ownership in companies. So it's investing in private companies, either buying them or buying parts of them, right? And creating value that way. Private credit, also referred to as a debt fund, right? That's not buying anything. It's actually taking the pool of money and lending it out on different deals. You might be lending into some large commercial construction project for years, or you could be lending into a fix and flip for the next 6 months. But you're lending money out into deals. You're either lending in a senior position, first position, or you're lending in a junior or mezzanine or whatever somebody wants to call it, subordinate position, gap, right? The second, third position between senior and equity. And then the last one, maybe it's covered on your screen, real estate. Now, these aren't all the types of funds, and there's a ton of other funds, and I've limited this to private types of funds, right? I'm not talking about mutual funds and those types of funds that are a little bit different. So the last one I have on here is real estate. Really common. You pool all your money and then go buy real estate. Now that's making its money because the real estate's charging rents or appreciating. Maybe you do some renovation to it. You buy commercial properties and do something that allow you to raise the rents, and then that raises the valuation. And then you sell it a number of years later and make money. I want to talk about one last thing when we're talking about this. And because real estate was the last one, some people say, what's the difference between a fund and a syndication? Doesn't a syndication just go buy real estate? And they're incredibly similar. Again, I'm not an attorney. This isn't legal advice. I'm just giving some opinions. A syndication is like a real estate fund that buys one thing, and it knows what the one thing is when the investors come in. So you say, hey, I'm going to buy this 500 unit multifamily. I need, $20 million of funding besides what I'm able to borrow from a bank. And then you go tell people about it, and you're telling them about that specific investment. They're not giving you money for some pool that's going to go into various different things over time. They're giving you money to go in that deal for the specific returns of that deal, that specific transaction. And so a syndication is really like a fund using PPM, LPA, subscription, all the same kind of stuff structured with the SEC, very, very almost identical to a fund. I shouldn't have said that. Some lawyer is going to get on my case, but very, very similar. But what it's doing is buying one thing, and everybody knows beforehand. A fund is saying, hey, bring it all in. And we're this kind of fund. We're a hedge fund. And so all your investors know, okay, they're doing something in the market, right? They're buying stocks. Now they usually talk about this is our strategy and how we're going to make money in the stock market. Or, hey, we're a private equity fund and we're going after this type of private. We're buying laundromats. And here's our strategy on how we create value by buying up laundromats or whatever it is, right? My private credit fund is focused on asset-backed and escrow-backed funding, and specifically junior position or second position gap type lending on the asset-backed side, right? Whereas some other debt funds are hard money lenders. They're focused on first position and they lend out as primary lenders in deals, right? So within each one of these, everybody has different strategies. But I thought it would be, a good idea to talk about what are some of the general funds out there and why are there different funds out there? All right. Hey, we'll see you again soon. Thanks.